Gold hasn't responded the way it typically does or historically does to chaos. And does that surprise you? Or what are your thoughts on that?
It surprises me, except the official price of gold is set by paper contracts, the gold futures. And during this period of time, for some reason, the stock market was going up. So the big brokerage houses and so on, the really big investors weren't shaken up that much by all of the violence over the summer and the rioting and the shutdowns and everything else. What was happening during that period of time is the Federal Reserve created massive amounts of currency, and then they have to they have to try to make the population comfortable, get the population to believe that everything is all right. And to do that, for some reason, people think that the stock market is the economy these days. Right. It wasn't like that back in the 60s, 70s, 80s. But ever since the NASDAQ bubble of 2000, people have identified the stock market with the economy. And so what the Federal Reserve does, under their normal open market operations, when they used to stimulate the economy by buying or selling financial assets, they would do that from the big brokerage houses that are the primary dealers that purchase bonds directly from the Treasury. When Ben Bernanke introduced quantitative easing, they started buying financial assets from non-bank entities. And the Federal Reserve doesn't create the dollars that you and I use. They only create dollars that circulate within the Federal Reserve system, only accounts at the Federal Reserve. So those dollars never leave the Federal Reserve. So when they buy something from a non-bank entity, they can't pay them. What they have to do is they pay their bank that has an account at the Federal Reserve, and then their bank creates a dollar for each. You purchase $1 billion worth of bonds from some fund, a pension fund, a hedge fund, and then you pay their bank a Federal Reserve dollar. That dollar can't leave the Federal Reserve. It's in the bank's account at the Federal Reserve. The bank then creates a bank credit dollar and puts it in the account of that pension fund. So for every dollar of reserves that you see, there's actually $2 that got created. And when they do this, there is this incredible correlation between the amount of base currency that the Federal Reserve creates and the stock market. During the years that Ben Bernanke was doing QE 1, 2, and 3, the correlation was 0.976. That means it was 97.6% the same. With a little bit of time delay, the stock market went up by the same percentage over the same period of time. Right. And so I'm sorry, I can't even remember what the question was. I went off on a tangent.
What would occur in the next market crash? Okay. Because in March, there was this flight.
Well, they won't be able to control the crash. All they can do is transfer wealth after the crash and make the richest people on the planet richer by stealing from the poor and the middle class.
Yeah. Okay. Now, this system, it works as long as we're growing, right? A debt-based system works as long as there's growth. I wonder, thinking back
we've had contraction lately. We're not back up to the levels where we were in February of 2020.
And I have to think that contraction is just getting started. If you look at so many small to medium businesses, yes, we're going to float the big corps, right? But it's restaurateurs, it's the hotel operators. They're operating 40 to 50% capacity. It's not profitable.
Right. And they're out of their backup capital at this point.
That's right. 100%.
They've been squeezed and squeezed and squeezed. And the ones that haven't gone out of business are hanging on by their fingernails.
Oh, yeah.
And here the government comes along with a pair of nail clippers.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
I'm sorry I'm laughing. I shouldn't be laughing, but it's you can see the predictability of this stuff and how, when you look at the CDC and so on, you see the death rates, the new data that they've published, and they've closed down the world economy, and they are going to be killing far more people through this collapse in GDP. There is a direct correlation to a country's prosperity, financial prosperity, with their lifespan. And so if you reduce everybody's lifespan in the country by making them poorer so that they have less access to quality healthcare, high quality food, and so on, right. Then it's basically tantamount to committing murder. They are they're going to end up doing the equivalent of killing more people than they're saving. And this is all to make some drug companies just uber wealthy.
One thing that struck me about you and your business, Mike, is I think you were the first precious metals dealer to accept crypto as payment for metals. Yes. Is that true? Yeah. So what were you seeing? And I guess how did those two asset classes play together for you right now?
Well, I see them playing on the same team. They're both safe haven financial assets, and they offer you a bunch of different attributes. Gold and silver are three-dimensional. They have weight. They can't vanish. They probably, Bitcoin started from zero. It had no value. Its first value was established in 2010 when 2 Papa John's pizzas were worth about $15 a piece, were traded for 10,000 Bitcoins. So that established a price of 1/3 of 1 penny. And then more and more people discover it. This is the first new financial asset in 400 years. There's, the first representation of a bond that we know of goes back to 2,400 BC in Mesopotamia. Stocks were traded they started trading about 500 years ago, and a little over 400 years ago was the first common stock issued from the British East India Company. Real estate and commodities have existed forever. And so this is the first new financial asset class in 400 years. And it started from zero. Of course, the gains have been spectacular. They've been the biggest gains in all of history. There is no bull market that can compare it's Bitcoin right now from its initial price is up 1.2 billion%.
Right.
Billion.
Yeah.
Now, is it going to have gains like that again in the future? I doubt that very much. And now Christine Lagarde, former chairwoman of the IMF and now the head of the European Central Bank, has said that she's calling on governments to try and regulate Bitcoin. Well, they can't regulate Bitcoin, but what they can do is they can cut off the gateways to being able to convert Bitcoin to fiat currencies and make it very difficult for somebody because it's not being used in transactions. The big hope and dream in 2014, I went to a Bitcoin conference, Bitcoin on the Beltway in Washington, D.C. And I saw that this was a tool for freedom, that it was this awesome thing. And I invested in it. I told all my insiders that I was going to be putting a percentage of my portfolio in it. And I started accepting Bitcoin. I was first precious metals dealer to accept Bitcoin, Bitcoin Cash, Ethereum. And we're still the crypto-friendly dealer. But what I do is I ride these things for their spectacular gains. And when they're going into a top, I convert some of the profits into precious metals, because if there's a problem with the internet, then there's no cryptocurrencies. If there's a problem with power, there are no cryptocurrencies. And these are genuine risks that you have to plan for. And so to be on both sides of the fence here, to have investments in both, is the safest thing that I think somebody can do.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.